Hello everyone, it's Lindsay Duff here with Motivated Trader. I just wanted to go over what happened today and give you a little recap, a rundown in case you were wondering how to really read the day. Um, so when we started the day, it was about right here when the day began. So we'll leave that there as the daybreak, opener right there. I don't rely heavily on what happened prior in the market to really help me determine what's going to happen now, unless we're talking about areas and overall trends. So when I'm looking at what's happening right here, I'm trying to determine first what is the overall trend. And the overall trend really at this moment is to the upside. Now, we have had a pretty good push down recently, it was back a few days ago, had a pretty decent push down. And now, ever since, it's been trying really, really hard to push its way back to the upside. It did continue to come back down. We get down and hit a bottom here, and then we finally start to make slow yet consistent movements to the upside. Now, I know when you're looking at the 610 tick chart, you're looking at that and saying, well, I see movements to the upside, I see movements to the downside, and that's perfect because the 1597 is there to tell us the overall trend. This right here, guys, is not my 1597 EMA, it's my higher time frame, the 135 period. And so this right here is my 1597 EMA followed by my 610 EMA. I had to simplify it. I had taken off my 233 EMA here and I actually took off my 1597 EMA here because I was trying to make decisions based off the 1597, which really means you need a lot bigger risk to take trades in that direction. And I'm really good with the risk that we take here. So let's dive off into this a little bit. So what we did start out is we're just looking at the beginning of the day. You're starting to see that yes, price has pushed below everything. So you may have been thinking, okay, I'm looking for a short as we come in right here. And you may have even attempted a short right in the very beginning. And I don't see too much of a problem with that if you're only looking at the 610 chart. If you're also looking at the 1597 chart, at that time your MACDs right about the open are they're well below everything. You have gotten back below everything. You do have that little bit of a guppy look here to the EMAs, which really means that to me that it's going to snap back. And so if you give it your first attempt and then you see that the MACDs are leading higher than that previous pivot like they were back here, then it's probably a pretty good idea to go ahead and get out of that trade. So I'm not even going to mark that as a short trade. Number one, it's the first bars basically of the day. So typically that's not just the really smartest thing to just jump right in right as the bell opens. So what happens then is it pulls up to your next area here. And so you have to think to yourself, do I want to take a short trade at this time? And that answer is absolutely not, because here is what is now happening with your MACDs at that point. And here's what's happening with your MACDs on the 1597. They're saying, forget about it, not right here, right now. So it pushes up and it comes right back down. Now, yes, I believe that this is an attempt at a long trade. You would have to really get down, you'd want to get down in a, close to the areas in order to take this trade. If you start getting up here, then what you start to notice and where I start to see what I call the potential for divergence is the fact that right here, right now, we need this the 610 EMA to start pushing to the upside to get back above everything to say, yes, we are going to shift everything to the upside. And when this pulls down, I mean, we have miles to go above the zero line here, but we're just breaking back above everything on the 1597. But what happens here is that the MACDs start to push down pretty hard. As these bars are forming, and I want you to look at the bars and not the box. As these bars are forming, you've got a floor here, you're trying to push to the upside, the prices are closing at the upside, and each time that happens, a MACD leads lower than the previous one. it finally starts to shift to the upside at this bar right here. And so at this time, you've pushed down, pushed down, pushed down. It's going to be a lot of work for these MACDs to come up and equal that previous pivot. Not too much work, but once you see this double bar, you reached a ceiling here, your MACDs are most definitely starting to turn, not only starting to turn, at this point, they're actually starting to push down on your 1597. It tells you that, hey, I probably don't want to be in this trade anymore. So you're not going to recognize that right away. You may, if you have been in the game a while, you're going to see that there is divergence here, and you're going to say, okay, I'm going to get out, but you may start waiting for the closes back, down to the downside. At that point, it starts to push through everything. There's not really a good place to get into a trade without jumping in, because we always want to make sure that our risk is going to go back behind the last pivot, where we don't want the market to go. So it pulls back up. I watched this as it happened. It was really, really quick. You were going to have to really be, I don't know, if you use the 233 EMA, you might have taken it from there. But once it pulled back right here, I'm like, all right, we're looking for a short trade. I didn't trade very much today, and I have been working on a few things. So we just kind of going to go through this. Now, once we get down to the bottom down here, what we see is we've had the weak retracement in the MACDs. It's pushed down to the bottom, and we're really not going anywhere on the 1597. The 1597 is actually leading higher in the MACDs. So at this point, you're starting to think to yourself, what is going on here? Are we going to be able to continue from this point? So what happens is the MACDs start rolling. If for any reason you haven't gotten out in this area once the MACDs are leading higher in the 1597, you most definitely want to be out by the time you've got this long bar, close at the top, and the MACDs are leading to the upside. So it pulls back into that area again, and you're thinking to yourself, wait, hold on, it's back here. And so are we going to continue to the downside right here? You've got a reversal bar. It's a perfect area. It's rolling below. But once again, we've got that kind of guppy belly look. It's pulling away. It's going to snap back to the area. So it snaps back to the area, and at this time, if you had chosen to take this short trade, you need to be looking to get out once you see these bars. They're actually moving to the upside. The MACDs are moving to the upside. By this time, your 1597 is starting to really roll to the upside. And then you can see that there's actually some really great spots to take this long trade. Now, news was also coming out right about here, so you may have not wanted to be trading during news. Some of you it matters to, some of you it don't. It's really your preference. But once it starts pulling back with these bars and the MACDs just continue to the upside, and you've got some strength starting to pick up to the 1597, who the 2338. So right at this time, let's look really quick. I just want to see where 37. So right here is where everything is starting to line up to the upside. You have your 1597 EMA, or the higher time frame EMA, with the 1597 above it, with the 610 above it. This is lining up for everything going to the upside. Right as it's right in this area, it's starting to line up for all of that. And then you have, it was a pretty quick move to the upside. If you could get in when it pulls back and you're looking for something right in here. Otherwise, I feel like you're chasing it. And you know what, guys? There are some people that definitely did get in right in these areas because of the way that they trade and the indicators that they use. Otherwise, the market wouldn't be moving up that way. And then as you're looking for an exit out here, you'll see it starts to stall out. You may be looking for an exit here. I like this close at the top, not being able to push past anything with the weakness in the MACDs at that time. That's something that I look for an exit. If I happen to miss that exit, now you've got a reversal bar with the close at the bottom with the MACDs leading way lower. It is time to get on out of that puppy. So what happens at that point? It pulls down, it pulls back up. Can you be looking for a long trade at this point? Yes, you can, but you have to be cautious about your entries and your exits. If you're looking for a long trade at this point and you're expecting things to roll to the upside, you need to be looking right here at the bottom. You don't want to wait for it to push up. because you had such an extreme push to the downside. If it is going to roll up, it's going to have a lot of work to do to go back up. Also, you had a little bit of a slowdown on your 1597 EMAs. It was kind of giving you a little hint that it might push to the upside. So if you wanted to take that trade, you have to be quick on the draw. Once you see this close at the high, but it couldn't push any higher, and you start to see something like this, you want to get out as quickly as possible. So that is also an entry for a trade to the downside. That look of that, what's Marina's the magic zone trade as it pushes down there. But watch again. You have to be cautious once it starts making these higher pivots to the upside. Your MACDs, your price, everything is starting to lead higher on the 1597. Also, I have a lot of lines on my charts as the day goes by. I started off in the morning and I look where these pivots are happening. And a lot of times, a lot of these pivots are happening with previous movements in the past, you can see. And so when we get to those areas, I like to see, well, what are we looking for once we get there? Are we looking to push through it? Are we looking for it to continue? So those are some of the tools that I use whenever we're looking at this. Also, one of my recent students actually really opened my eyes to the fact that he's using pivots on the MACDs as well. And man, it has been a bit of an eye-opener using that, looking at where it's hit these areas in the past. I had a lot more lines on here earlier, but I don't want to confuse anybody, so I'm not going to go too crazy with those. And same with pivots here. So if you did take the short trade here and you're starting to pull away from things, look what's happening. As you're pulling away, there's really no change in the EMAs. The EMAs are, it's that guppy belly look, it's flattening, everything is kind of lining up together for very flat, but your MACDs on the 1597 are telling you that this is pushing up. So if you haven't exited by here, once you start to see something like this, you want to get out. Now, when do you take that trade to the upside? Do you just hop in right here? Heck no. I mean, everything's flat. Yes, it's going to remain that way. Let's see, right here is where your EMA is for your higher time frame. So now it pushes up. You don't want to just jump in there. Do we want to get in here? No, because these bars are really weird, and you're starting to kind of roll below here, and you've got a little bit of a roll here, and then it pulls down right at this point, and it gives you a floor right here. It gives you a floor, and when it gives you that floor, these MACDs lead higher. And at this point, you're starting to pull up and pull back down. This right here, if you haven't already started to see the reasons for entry and know that you'll be able to have a good low risk if you were to get in back here, right at this time in these areas, it's like, okay, go ahead. It's time to start looking for that entry. And it pushes up and it slows down on the 610. It even pulls back, and you may have been sweating it, or you may have been looking for an entry right in here at these points. But look at the MACDs on the 1597. That is the only reaction they have when you get all of this on the 610. And so then it pushes up to the upside. Okay, so now here is a major opportunity to learn about trade management, because you always want that risk to be where you don't want the market to go. So if you get in right back here, you want to hope that it's going to be number one, 2 ticks behind here, especially if you're getting in right at this point, or 2 ticks behind this area. So a lot of times you'll see me moving my stop around as stuff is happening, because I'm counting, and it just makes me feel more comfortable. Like 1, 2, 3, 4, 5. That's where my entry is. That's where my stop will be. Okay, I'm comfortable with that. Then I can scoot it up just a little bit more. Once it pulls down, and you want to wait. You don't want to move your risk up 2 ticks behind here before it takes off, because then you risk the chance of getting stopped out. So you're still back here. It pulls down. Everything is starting to go up. This line actually right here, and let me just remove all these because it can be things that we talk about later on in the future. But this line right here is representing the 1597 bigger time frame EMA. And so then it pulls down here and then it starts to pop up. This is the first time that I say, okay, we've made it above this ceiling. I can consider moving my risk 2 ticks behind here, which puts you right behind this area, right around a break even. At this time, there is so much strength and momentum in the 1597 MACDs that this is a home run, okay? So you can start moving that stop up just a little bit. You create a little bit of a floor here, not the most comfortable floor to move behind, but once you have this little stair step down and it pops right back up, that's all your MACDs do, then you're going to move your risk just behind there. Then it pulls up, long bar, move your, by this time, I'm micromanaging my trade because you're up so many points that if it pulls back, who cares, right? So 2 ticks behind here, pulls up, comes down, makes a little floor, 2 ticks behind there. Now I pull up and I get this small bar that just reached the high of that. I'm starting to consider, I've been in this trade for quite a long time, I may want to go ahead and consider taking an exit. So it pulls up at that point. I would be out at this point. Then it pulls back down. If you're still in this, it pulls down, gives you another spot to move your risk. Then it makes a ceiling. Your MACDs are leading lower, and this is the reaction of your 1597 MACDs. If you haven't already exited or gotten scared out previously, then you definitely want to look at taking an exit around here. There's a lot of opportunities that if you don't feel comfortable holding that long, even back here, if you got in earlier, the reversal bars, and I'm putting it at the top of those bars. I would never catch the top of those bars. I'm not going to lie to you, make you feel all warm and cozy and like, I can get the top of these bars. I know plenty of people that do. Just personally, I would not if I was in those trades. I would need to be down just a little bit further because I want a little bit more confirmation. So then it pulls forward and it comes back down and it gives you quite a few opportunities if you just want to blindly go with the trend to the upside. There is a lot of strength and momentum. By this time, your EMAs are all spread far apart and they're really pushing hard to the upside. There are some other opportunities to enter as it pulls back at these points. I look for, you could possibly get in here. You might have gotten a little scared out as it pushes down right here. Your MACDs still have some strength to the downside. It begins to roll. It gives me that tiny little bar with the close at the bottom with its tiny little tail. And then all of a sudden, you start to get these pushes to the upside. These give you a pretty decent place to still put your risk. As long as it's like behind, I would consider this a floor, this just a little bit of an attempt for a FOBO or just a deeper push before they went up. And so, getting in just a little bit later on this one, you may have, if you're using your 233, I can guarantee you may have been looking at a entry up in this area. And then there are a couple more. I wouldn't be a huge fan of entering by this time. And let's talk about a little bit about what's going on up here. It's just my personal preference. And here's some exits along the way. My personal preference is by now you've had a strong push in the MACDs to the downside. We do have divergence on the 610. And you've had divergence on the 610 already. Let's look at this. You've already had divergence on the 610. In a strong trending market, that divergence means almost nothing because here's what's really happening. There's a lot of strength and momentum. Those divergences are just because the price and the MACDs, the price is pushing up so hard and the MACDs are pushing up hard with it, and then they have to have a hard push back down. And they've got this hard push back down, and then it hangs out here a little while before it goes back up. And so you're going to see these divergences on the 610 far before you'll see them on the 1597. Now, when the divergence happens on the 1597 right here, I have to say to myself, all right, do we see the potential for this to break or for this to hold? So we've got 1597 divergence, MACDs are leading lower, and so it does have the potential to go up stronger just because of the strength of the MACDs. Possibly even looking for a short trade just for a very small profit here at this point. Once it starts to die out at the 1590 or at the 610 EMA, it's going to be, let's not push this one too far, and maybe look for an exit as this is happening. I'm not looking to take any kind of short after this reaction in the MACDs getting past the 1597 EMA. It's very weak push down so far in the 1597 um, MACDs. So, and then it pushes to the upside. It gives a really hard push. It pulls back here. I could see taking that with the strength of the MACDs to the upside, moving your risk, and really, you, in reality, if you're trading the way that I do, you're not going to catch that right there at the bottom. And then there's some opportunities if you're concerned about the divergence, a quick exit here, or even once it dies out up in this area. Now, then it pulls back into the area, and at this point, now your MACDs on your 1597 are really pushing up hard. They're doing a very, very weak retracement as it pulls back there. I'm not the biggest fan. I struggle with these, but there are the opportunities, and I see them. I see them every time. It's taking them. That's not my not my strongest suit. And I'll be honest with you. I mean, I'm not a perfect trader. I don't think anybody is, but we live and we learn. And so then we have this push up, and it's starting to really struggle to get up. It's really stair stepping. You're gonna have to keep moving your risk in as it goes up a little bit, and personally, as soon as it starts to stall out about right here, if not once it reaches about right here, and then there was just 90 gazillion opportunities to exit. By this time, what's happening is now you're pushing up harder and harder and harder, and your MACDs on your 1597 are really starting to tell the story. They're starting to say, okay, we are running out of steam. We can't really do this anymore. It pulls back, and then you get this last ditch effort, the close at the top after the MACDs couldn't do anything, and then it just pushes down really hard and starts to push to the downside. By this time, it's getting too close to the end of the day. There are lots of pullbacks. It is not pretty to enter in any of those, and you can kind of see the way it just kind of slides in to try to change the trend. I mean, the MACDs are definitely telling the story. Right here is a place you could really get eaten up toward closer to the end of the day, and when it's had so much strength to the upside, it's going to be a struggle to have it go down. So that is your daily market recap for Tuesday, March 28th. If you guys have any questions, just let me know.